All right. Good afternoon, everyone. My name is Pierre Demian, Senior HR Analyst from the city of Carson. I'm in the company of Ms. Rodriguez. She is also an HR specialist from the city of Carson. We're here today with Christina, our VOYA rep, who's going to be giving you an overview of the VOYA plans and how would you be able to sign up and also as well as answer any questions you may have. Now, before we start, I would like to let everyone know that this is a recorded session uh, because due to COVID-19, we cannot have this in person. So the city looked to do this virtually. The recording will be posted on the city's YouTube page within 2 business days after today, and is going to be made available until the end of open enrollment, which is October 16. But because due to the city working 4 days a week, our effective day is actually more of October 15, and that should be a Thursday. We ask all members who want to do changes to their accounts or want to take advantage of open enrollment to please make sure that if they have any changes or they want to make any updates or so forth, to do that at least 5 days before the end of open enrollment in order to allow for changes or updates or any other information or to account for possible network issues and so forth. And without any further ado, Christine, Nina, it's all yours.
Hi, thank you. So I recognize some of your names that have signed in here, but I'm Christina Bell Taylor, and I am the on-site rep for the City of Carson for the VOYA 457B plan. I'm going to do an overview today kind of what the plan is about, how you can enroll, and that sort of thing. And then since some of you are already signed up, I can see then if there's questions at the end or things you want to ask or discuss, I'm available to do that as well. For those of you that aren't familiar with the 457 plan, it is a retirement plan that is similar to a 401k plan or a 403b plan. They are different sections of the tax code. So 457 allows employers to set up a retirement account for employees to contribute money out of their check, defer money out of their check into a retirement account. And in that retirement account, it has tax deferred growth until it's withdrawn either at separation of service or at retirement. For the City of Carson plan, you are able to start your contributions with as little as $25 per check. And that amount can be increased and it can be decreased and it can be stopped and it can be started again. So with this particular benefit, if you start your contributions at $25 and 3 months from now you decide that you want to increase that to a different amount, you can do that or decrease or stop them and then later on in the year start again. And there's not set in stone for until a particular enrollment period was the point. The one thing you can't do is pull the money out or access it until you retire or separate from service. So the money stays in there until one of those triggering factors happens. And there are caveats to that. So there is a hardship withdrawal available to you, and you must meet certain IRS guidelines in order to qualify for that. And then you also have loans available on your account. So you're allowed to borrow $50,000 or 50% of your account value, whichever is less. And there's a couple different loans available to you. And of course, if that ever comes up, I'm here to help you and explain them to you in detail and that sort of thing. So once the money is deducted from your check, where does it go? It's deposited into your 457 account, and then you're able to direct where you would like that money to be invested, what type of allocation. So you can choose either to pick an allocation of mutual funds that are available to you, and that's something I can help you do. Or there's also a fixed account available to you. The fixed account has a guaranteed rate on it that can change, but it's a protection of principal. So your balance would always be going up a little bit in that account. It's not going to drop. With the mutual funds, there are various funds to pick from in all different asset classes. And so when you sign up, then we would schedule an appointment, and I would explain all of that to you and try and help determine your risk tolerance and where the best fit is for you to be invested. You are allowed to change your investments around at any time. So if you set up an allocation and then decide 6 months from now or a year from now that you would like to be more aggressive or more conservative, then you can do that at any time. And again, something I would help you with. If you have other retirement accounts out there, if you have IRAs or other employer-sponsored plans like 457s, 401k plans, 403b plans, things like that, the plan is set up so you can roll them in to the plan, and that's something else I can help you with. What we would always do is take a look at your plan from your previous provider and look at the fees and costs and funds and things like that and do a comparison with the new plan at Carson to make sure it's in your best interest. And then once we determine that it is, we would complete the forms, which I can assist with and facilitate the rollover for you. I am here, like I said, if you need help enrolling or if you need help with an allocation, if you have an existing account and you just want to review your allocation and make sure you're on track with your time horizon to retirement, rolling money into your account, questions about the plan, and that sort of thing. There are 2 PDFs that we've posted to the extranet and intranet Carson site. The first one is a 1-page flyer, and it has the instructions about how to enroll in the plan. So it will walk you through the steps, and it has the link that you would go to and the verification code and plan number and all of that. And then with that, you can schedule an appointment, like I said, with me. So I can be available while you're enrolling via the link. So you can see it there. It's the enroll.voya.com. And then it'll ask you for the plan number and the verification code. But once you get in, it will ask you, for your name and address, and then it'll start asking you other questions about yourself to create a profile. So like I said, I'm available to walk through that with you or just be available in case you need to call. The other PDF we have posted is an overview of the 457B plan. And that is going to just review things that I covered today for you. So you can kind of, read through and see if there's any information that you get that you have questions on, or may cover it in more detail, since it's hard to remember everything in a presentation. But it's a pretty comprehensive piece, so it kind of walks you through all the steps and that sort of thing. There is a limit set for the 457, which changes. It's set by the IRS. So for 2020, the limit is $19,500. And then if you're over 50, you can contribute an extra amount. It's a over 50 catch-up. And then as you get into your later years before retirement, there's also something called the special catch-up provision. And that provision allows you to contribute twice whatever the regular limit is, but it is and for 3 consecutive years. It's something you have to qualify for, though, based on underutilized contributions. So yeah, you can see here he's scrolling through the PDF. It gives you an example of how your contributions would grow based on different time horizons. So yeah, the special catch-up, it's something I would help you with. You have a worksheet that needs to be completed, but I can do it for you and help you with it and walk you through it and take care of all of that for you. And then now that we have this up, the contribution that you make to your 457 plan, you can actually choose whether you want to do that pre-tax as a deferral or after tax as a Roth contribution. So with the pre-tax, your money is going in to your 457 plan before taxes are taken out. It grows tax deferred. And then when you withdraw it at retirement or separation of service, it would be taxed as ordinary income. With the Roth side of it, you would make the contribution with after-tax dollars. It would grow tax deferred. And then when you take it out at retirement, it would be tax-free. And there's certain restrictions around that. But so you are allowed to contribute to one or the other, or you're allowed to contribute to both at the same time if you would like. The contribution limit for the year, though, is aggregate between the two. So if you had put 10,000 into the pre-tax contribution, then you would be able to put 9,500 into the Roth, or however it worked out. But you can't contribute 19,500 on both sides, is the point. Does anyone have any questions we could start answering, or if needs to schedule an appointment or anything like that?
I actually have a couple of questions, Christina.
Okay. Mm-hmm.
Okay, so I worked at a school district before, and I have several retirement investment accounts through School First.
Mm-hmm.
Actually, let me just pull up the numbers, the plan numbers, because I know you're going to ask me for them. And here you go, they're coming up. First of all, let me ask you, what is the administration fee for the accounts? There's an administration fee on this account, correct?
Yes, there are fund expenses and there is an administration fee. And I think I can actually get a PDF for you and post that, because we just reduced it recently so that it went to a different format. And I actually don't have it handy, but I can certainly, I can get the sheet for you and send it to you so that you can post it, put that on there.
Okay, we'll happily do that. So yeah, so the accounts that I had, and this is through School First, was a 403B, and I have a 457B and a Roth contribution, as well as a 403B employer discretionary. I'm not sure about that one. So these accounts can be carried over into VOYA?
Correct, they should be able to. So what happens is when you want to move them over, I typically schedule an appointment. We contact the previous provider, which would be Schools First. And then we want to make sure that one, there's no surrender penalties that exist on your account if you were to move it over. Then two, we find out, all the details about the account, what you're invested in, and if there's anything that can't be liquidated or moved. So we find out ahead of time. Sometimes there's an admin fee that they charge if you terminate your account. So they would, we would find that out as well. And then we try and get all the fees and expenses associated with the previous account. So we can do sort of a side-by-side comparison to make sure that moving the money into the new plan is in your best interest.
Okay, that sounds good. Now, we are in the COVID-19 era. So is VOYA offering like any special loans against your savings to help cover with COVID-19 emergency costs?
Mm-hmm. So there is, from the CARES Act, what they did was allow some of the benefits, I guess for lack of a better word, of the CARES Act onto the plan, so that you could take loans and distributions and that sort of thing. So if there's anyone that has been affected by COVID and has a problem that, when they need to access money for that reason, they can certainly contact me, and then I can advise them on an individual basis, and then also call in to them to customer service and facilitate the phone call to help them arrange getting the money out, explain all the details and that sort of thing. But basically you self-certify that there's been some sort of instance to you or your spouse or something where you've been affected by what's going on.
Okay, I do believe we have a question from Muniz, and it's saying, is IRA account better than a 457 or vice versa? Do you recommend both?
So they both work very similar. You can have a traditional IRA, which is pre-tax contributions, or a Roth IRA, which is post-tax contributions. Typically, the employer-sponsored plan tends to have lower fees associated with it due to the economy of scale of the money involved in the plan. Whereas an IRA would likely, if you were investing in mutual funds and that sort of thing, have fees associated with it and fund expenses that may be higher, unless, of course, you were at the bank and just doing a savings account IRA. The 457 plan does have much higher contribution limits than an IRA does. So that's definitely one factor that's beneficial. And then the Roth 457 feature doesn't have income restrictions on it. So if you were to try and open up a Roth IRA, you would have to follow within certain income guidelines, whereas the Roth 457 allows you to contribute up to the maximum per year without those income restrictions. And it can go into more detail of your personal situation. So I'm happy to reach out to you and discuss it on a one-on-one basis.
All right. Okay, he's saying great, thank you. Okay, thank you, Muniz. All right, I actually I have another question that somebody else asked before. If I have a dependent who has an account, as his or her former employer or current employer, can those accounts be combined with an employee account, or they need to be separate?
Yes, so your employee account at Carson can only be money that you've earned and rollovers from accounts that are in your name. If you have a spouse or a dependent or somebody like that who has a plan from a previous provider or employer, that money can be moved out into something, but we cannot move it into the Carson 457 plan per se. The only exception to that would be if you had an IRA that you had inherited as a spouse who had passed away or something like that, and the IRA had been moved into your name, then we would be able to look into moving it over to the Carson plan for you. In terms of spouses and dependents, certainly we are able to help them with anything, investments or accounts that they would like to move over. It would just be, it wouldn't be in the Carson plan, and we would just have to evaluate it based on that particular situation.
Okay, well, thank you, Christina. That was a wonderful answer, because that is a very common question actually I hear in the industry, that people just think they can just combine the accounts. Now, I don't see any additional questions in Garcelle. Did we receive any inquiries from any questions? I don't think we received any emails or any questions, but any last words of advice to, especially to those who may be thinking maybe this is not for me, I have my CalPERS or everything. I mean, I can give a word of advice about this. I had CalPERS for many years, but I have like other accounts, because it's always a good idea to save that $25 to $100 more a month. So Christine, if you want to give us any last few words for wisdom, that will help further explain, or may answer any additional thoughts or anything as well. If you can also list your name, or provide your contact information as well for everybody. Thank you.
Sure. So I would say that, definitely if you don't have an account, get started. And if you start with as little as $25 a check pre-tax, it doesn't change your take-home pay that full amount. It would change it a lower amount, because the money you're saving in taxes isn't showing up as your deduction. So there's contributions or illustrations I can show you where it shows you, if you put in $25 or $50 a check, how it would change your take-home pay. I think once you do that, you get used to it. You get used to living without the $19 or $20 or $21 that it would change your take-home pay, and then your account starts to grow, and then you can increase it another $10 or $15, and And as you go on, it just, continues to build, and you continue to learn to live without that extra bit of money. And it really is, especially for starting young, a great tool, but at any age, definitely. And you also have the option to take, sick leave and vacation hours and things like that that are unused, and dump those into the 457 plan pre-tax if you'd like. So that's another way to build up your account. But it's always nice to have that extra money in addition to your CalPERS, depending on how what your plans are. But I think it's a great tool, and the Planet Carson is a very nice plan with great mutual funds that are reviewed by the consultant periodically. And so you have a really nice fund lineup and plan available to you. And the payroll deduction is of course so easy. I believe my contact information is posted on the VOYA website, but my phone number is 949-395-4365. And my email address is the letter K, Bell, B-E-L-L, Taylor, T-A-Y-L-O-R, at VOYA, F-A.com. So FA is in financial advisors. But Griselle has everything up there too. So if you need, didn't get it or misplace it, you can always reach out to her and find me as well.
Right, Christina, I just listed your phone number as we have it right there, and it was a full title.
Great, thank you.
As well as the email. And for those who are seeking to make an appointment with Christina, please give her a phone call on the phone number 949-395-4365, or you can reach her via email again. That's KPELL Taylor at VOYA Financial Advisors, right? FA.com.
Yeah.
To make an appointment with it. Now, on behalf of the City of Carson, I don't think I have any more questions. So, Christina, on behalf of the City of Carson, I'd like to thank you for your assistance today and the wonderful information you provided to all of us. And for our wonderful employees who are participating today or who will be viewing this recording, it's going to be made available until the end of open enrollment, which is October 16th. But once again, that falls on a Friday. Our actual open enrollment will end effectively on the 15th. If you want to make any changes, there's nobody here in the office on the 16th to assist you. The HR risk management team is on site, so here to assist as much as we can, as well as our wonderful representatives such as Christina. So make sure you use this opportunity during open enrollment. And I think one of the good things about VOYA is once you sign up for it, you can actually make changes throughout the year, correct?
Correct, absolutely.
Yes. So it's a wonderful opportunity, and cannot make a recommendation for anybody to take it. I personally know that I had these accounts in my previous employment, and I know I signed up for it. So mine will probably be starting. Since I'm new employees, takes I think about 60 days before it starts, or something of such nature. But we'll go ahead and once it gets going. So since there's no more questions, Christine, once again, on behalf of the department and the city, we'd like to thank you. I'd like also to thank all the participants who joined us today, and this meeting will be now ending. Thank you all. Have a wonderful and safe day. Bye-bye.
Thank you very much.